Good morning. It's Tim Seymour. It's 8:40 on a non-farm payroll day here in the States. Watching the U.S. drive all markets higher as we had an unexpectedly bullish, only 11,000 jobs lost. Unemployment rate dropped down to 10%. Heavy expectations, consensus for about 140, 150 in terms of jobs lost, and the unemployment rate potentially even ticking higher on the technical elements of less folks in the workplace looking for jobs. But again, very bullish for global markets. The U.S. still the consumer engine that drives the world. The change in hourly earnings was better than expected. The overall work week remained about the same, but the headline rate falling from 10.2 to 10% is politically going to have a major follow-through, at least in terms of sentiment, consumer confidence over the weekend. China up 1.61 last night. India, South Korea, Malaysia all trading down 50 to up 50, and Taiwan down 44 bips. So Asia pretty calm. Currency's almost flat. But Central Europe, Russia's up almost 2%. Most of that coming since a spike up. Oil has rallied. Turkey up 60 bips. We know that the Fitch upgrade leaves them now just one notch below investment grade, watching the IMF there. But Turkey, a story that's lagged. A lot of people are looking at that and feeling that there may be something to do there going into year end if they get that IMF deal. Brazil up 1.07%. Currency also rallying a bit this morning, following the same clues as everybody else. Colombia, Chile down about 45 bips and looking to test some of the resistance levels. I think in the case of Chile and Colombia, these are markets that are right near their highs. Looking into South Africa down 50 bips. Currency 55 basis points stronger. Watching Rand strength. Rand strength, remember, is not good for the miners, is not good for a number of the export plays, and certainly not necessarily good for an export story. Government watching that. But overall, again, it's about non-farm payrolls. Everybody was waiting for this number this week, and I think this gives you the rationale that you could take things higher. Add that to Bank of America that says there's some healing going on in the financial space, and all this means that riskier assets should get a bid. We'll watch the dollar because that's the ultimate barometer of whether people believe the risk trade is on or not. The dollar or the Dixie's response to that non-farm payroll number was to rally, and if there's strength in the United States, you should see a stronger dollar. First whiff is that should be not great for resource stocks, but again, a strong dollar from a strong U.S. consumer is ultimately great for the global trade. That's great for emerging markets. Thanks.